Hey traders, welcome to the market internal review for June 9th, 2023. That was this past Friday if you're watching relatively close to current market. We did open up with a rather large gap, and the add and volt bands were at a divergence, with most of the stocks signaling a decline while the volume was going into advancing stocks. So a little bit torqued up here at the open. We had kind of this algorithmic crawl up. Not a whole lot of signal per the internals, other than trend was saying there was an imbalance, so you could expect price to move typically when that is the case. However, the average closures of the tick were below zero, and we weren't seeing a lot of extreme movement on either side. We finally get a session break right here at 1050, bounce back above, and come up near this relative high here. We fail to break that and we lose the session TWAP again. Now, roughly about that time, we see the weakening of the volume, the VOLD. We see its 20 SMA trend signaling a bearish reversal, and the add and its trend are already signaling bearish. We're still in an imbalance, and the average closures on tick have started to go below zero earlier. Once we get this retest, this was a perfect short opportunity, and everything is signaling bearish. We do finally start to have some extreme lows right around here at 11:30. We have an extreme closure right at 11:30 exactly on that second deviation low here. We oscillate back through that a couple times. We make a new midday low here, and then you can see we start to flip bullish potentially on some of the indicators here, and we're starting to see a little bit of our trend signaling some struggle where we have no dots, no imbalance or balance. And then we start to see balance notifications here, these yellow dots, and just a lot of divergences all across the board, making this very muddy to try to trade at any further attempts. So if you're just using session TWAP, perhaps you could have grabbed a couple of additional trades on this reclaim, but there wasn't much down here that was giving you any kind of confidence as to a reclaim attempt to begin with. So not for me necessarily, but SPY, let's see, here at the end of the day, well, actually, that was SPX. Same thing effectively. So, but the total move here, okay. So the entire day we landed flat. Essentially, they lost 5 cents, roughly. We'll turn on tick levels here. Tick levels is set up for 600 breaks, and we can see we had a high one here near the high of day. You can see the confirmation of that down here on our tick histogram. Then we have that reversal snap back to session TWAP, and we oscillate through there, and then there's that rejection. Every time we hit that second deviation, look at that, we snap into some hard tick. Every time. Fascinating stuff. So we built this structure here, and once we reclaim, that's when you see that final push into TWAP. So rather well distributed. None of these are really speaking out to me as being any higher significance than the other ones. And I think that's indicative of the fact that the price literally closed roughly right where the open was. Very little progress was made. If we look at the week, here price dumped right into that first standard deviation high on the weekly TWAP. Yet again, serving as a potential target or an expected area of reversal. Very fascinating. We'll set this to the monthly TWAP. Let's take out the session TWAP price, staying roughly right around that first high deviation on the monthly TWAP. Still building some of that value. Fascinating to see it oscillating right in between monthly TWAP and the high first deviation. Very cool. So that's SPY. Okay, Q's had roughly the same movement. If you notice, Q's was a little weaker, 16-cent loss, but relatively flat all the same. Turning the session TWAP on, much the same move, right? We had a little bit of a different structure here with this pivot point built. That was what was retested before we lost session TWAP right along with SPY right around 11:30. So good alignment with the internals, I would say, mostly overall. While this was bullish in that it was green, you can see it was much brighter, and then it darkens clearly as the ad finally flips full bearish right here about this time. Okay, we wait for that rejection up here at this previous pivot point, which happens to be right near the upper standard deviation, the first one. And then once we get that closure under session TWAP, boom, some good short opportunity there. Same structure down here with that relative low for the day, tested multiple times before we reclaim session TWAP. But as the internals are independent of any one stock, it's the exact same setup down here as it was for SPY. Turn the tick levels on, much the same. Definitely a neutral result for the end of the day, being that the thickest level is in the middle, and we have a couple little levels on either side of it. We'll look at the Dow. Very choppy price delivery here. This is one product I don't typically trade unless I'm doing swings. Let's look at IWM. All right, IWM much weaker towards the end of the day. There was no session TWAP reclaim. We fizzled out and rode that first deviation low for the rest of the day. You see we made a very strong sell-off here where the tick had the extreme bearish closer at 11:30, but then we never really reclaimed off of that. I would say we oscillated mostly right below and above that for the rest of the day. Go take a look at tick for the day. So taking a look at tick, it's quite obvious. We have that chunking, significant portion. We see a small bump up here. Tons of, just really big action down here. This is mostly bearish. To me, it's pretty clear. Obviously, there's always some noise with the wicks and everything, but you can see most of these never made it past that 500 high end. So very thick level right here of resistance, but we don't see that down here. We see a ton of closures. There's that extreme closure around that extreme low right here around 1124, and then 1130. There's our extreme closure under 800. Taking a look at trend. So here's what's fascinating. So we have that SPY move. We saw SPY went up during the day. Look at trend. Trend actually went below the extreme bullish 0.5 level. Once we reclaim that, you can see that's when the sentiment had changed. I'm going to turn on we'll just turn on the 20 here. There's that 1034. We'll mark that out. That's the 20 SMA cross. We reclaim and we start trending up. Now I said before, if price is in the bullish area, but it's trending up, as far as trend is concerned, that's bearish. That's potentially a bearish short setup. And then we have this weird oscillation right here. It's very choppy towards noon. And then we fizzle out and we're bumping into balance, not in the bullish zone. Ideally, I really want to see it down here for bullish, and we're trending underneath the 20 SMA. So if we go look at 1034 on SPY, let's find 1034. So boom, look right here. They'd never bought any more past 1034. The market basically was in a downtrend for the rest of the day. We lost $1.62 from that point. Now, obviously, it's not always that easy every day. Just buy a position off the 20 SMA cross on trend, but this shows you the power of that. It's all on display right here. Very interesting. Take a look at ad. So ad was a little trickier, given that we only had roughly a balanced day per ad, where we were crossing bullish around 10, and then we lost that around 1058. So a little bit laggard compared to the main indexes. And then we oscillated around the 20 SMA for the rest of the day. Never went full bearish, and certainly never went bullish. Never made any real headway. In the VOLD, not much telling for the week ahead. we just had another similar time to add where we had the oscillation. So we went bullish there in the morning where we had the buy up on SPY. Once we lost that 20 SMA, roughly around that 1034, 1050 time, once we lost that, that's where we started to see the selling off on SPY and Qs. Notice similar characteristics here in this chunk of candles to what we saw on trend. So that's a good callback to the fact that trend is a mixture of add and vold. There's some division being done. It's effectively a ratio chart that builds this indicator. So right here, this is a good reason why we see similar candles. They're just inverted because this is inversely correlated. All right, folks, I think that about wraps this up. Not too much else to look at. I'm not going to check out some of the other names because they're pretty much fizzled out from all the news. We do have FOMC this upcoming week, and I'll be using the internals like I do every other day to try to find opportunities. Hope you've been enjoying the content. Feel free to leave a comment if you have any feedback on the indicators or anything I display here. Hope you have a safe trading week upcoming, and thank you for watching.